Traders, I got a fun one today. I'm going to be doing something a little different and getting into a little money subject. I know we trade, and the topic of money is one I like to discuss because it's misconstrued. Idea. Idea is the key word there. Why the rich get richer, the poor get poor, what the poor don't understand about the rich. Going to dive into it, guys. Stay tuned. We're living in very volatile times with inflation on the rise. We're going to be getting into that as well. These stimulus checks, did they actually help the poor or did they make the rich richer? We're going to dive into that as well. And the concept of money. The rich really see money as an idea, not as a tangible asset. That's a big difference there. Money is an idea. It's perceived as an idea. Why is that? Because the idea of money having value, that idea only exists if we perceive money as having value. So really, if you see money as an idea, not as a tangible asset, you will realize that it only takes an idea to obtain money and not necessarily your time. The problem is a lot of the poor people think that they have to trade their time for money, and they think like an employee. Thinking like an employee means thinking on the clock. I get paid for my time. I'm paid by the hour. You guys know as traders, we're not paid by the hour. We're paid for opportunity that approaches us in the market. We're here and we're waiting for opportunity. So you have to get this concept out of your mind that money equals time. My time equals money. This is the employee mindset. You got to get out of that mindset. One thing that's helped me in my career, I haven't worked as an employee for nearly 7 years now, is I don't trade my time for money. Every career I've personally pursued in the last 7 years, I've started at saying, I don't want to be paid. Don't pay me. I don't want to train myself to think like an employee. I want to train myself out of that. Get out of that idea. Let me create an idea first, that value, and then money will be a byproduct of that. Let's get into a list here. Mentality, poor versus rich. The poor, success is unimportant. Success is an obligation for the rich. They blame others. The poor, rich, they hold themselves responsible. That's very important with trading as well that we do. If you don't hold yourself responsible, you don't learn. The poor spends money. The rich invest money. Here's a very big point. The rich pay themselves first. The poor mindset is spend money first, save money after that. The rich mindset is, let me save my money first, pay myself first, and then spend what's left over. Not spend first and save the little that's left over. That's the biggest difference. The poor have very small net worth compared to their income. The rich have very large net worth compared to their income. The secret sauce to that is to minimize your realized income, maximize your unrealized income. Maximizing your unrealized income is tax deferred, right? So it grows tax free. When you realize income, you're partnering with the IRS, right? You have to pay taxes on it. So that's the secret sauce there. Poor refuses to study. Rich reads and studies. Poor, attention on the past. Rich, forward thinking, attention on the future. Poor is income driven, rich is net worth driven. We just went over that. Poor thinks small, rich thinks big. Poor fears change. The rich embrace change. Poor people love to criticize. Criticism is a way of deflecting, just so you don't have to look at yourself in the third person and make changes, whereas the rich, they compliment others. The poor waste time, rich, they buy time. Poor causes problems, rich solves problems. Poor, single flow of income. Rich, multiple flows of income. Poor, work-driven. Rich, they're goal-driven. Again, the idea. I want to elaborate a little bit on the secret sauce. Minimizing your realized income, maximizing your unrealized income. And this, again, goes back to paying yourself first. Buying assets, not liabilities. This is a huge difference between the poor and the rich. The poor spend all their money first and on liabilities, everything that goes down in value. The rich, what are they doing? Well, they're buying assets, things that go up in value and will pay them and are tax deferred and appreciate in value over time. Imagine this. Imagine playing a game of Monopoly And rather than buying assets that pay you, you just are always circling the board trying to avoid other people's assets, landing all those, and you're just merely pass and go, collecting $200 in partnership with IRS, paying them their share, going back on the track, trying to avoid more assets, getting your $200, trying not to, land on other people's assets to pay that out. The idea is buy assets that are going to pay you, that go up in value. Minimize the realized income, maximize the unrealized income. And that can really boil down to, are you over-consuming and under-investing? That's pretty much all it is. You're over-consuming, under-investing. You need to over-invest, under-consume if you really want to be an accumulator of wealth. Now, I want to share this with you guys. It's in a book I've been reading, The Millionaire Next Door, which a lot of you have probably read. It's an older book, but this page I read last night was seriously on the inflation topic that we're seeing today. Let me read this to you guys. I'll put it up on the video as well so you can see it. You have two different people, Dr. South, Dr. North. Dr. South, he's an under-accumulator of wealth. Dr. North is a prodigious accumulator of wealth. So, the high rate of inflation. Dr. South is concerned that the government action as increased spending and increase in the deficit will precipitate a significant increase in the inflation rate. So he has a level of concern. That is Dr. South. Dr. South, again, under accumulator of wealth, he's an over-consumer and under-investor. Now, like many under accumulators of wealth, he keeps trading up more expensive homes, cars, clothes, blah, 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 so on. And on the other hand, Dr. North, the prodigious accumulator of wealth, he feels that inflation will significantly increase the value of at least part of his investment portfolio. Now, you guys know these stimulus checks have been going. 3 or 4 of them were sent out last year. And poor people, they want to get stimulus checks, right? But little do they know that stimulus checks are actually making them poorer and rich people richer. Just look at what we're at right now. Stocks are at all-time highs. Real estate is hitting highs and going up incredibly fast. Inflation of everything's going up. So poor people spent their stimulus checks, and now they're even deeper in the hole than before that. Whereas rich people with assets, stocks, real estate, they're doing better than ever. These are all things that the poor do not understand about the rich. It's actually fairly easy to accumulate wealth. It just comes down to discipline, which nobody has. Nobody has discipline. Guys, if you found any nuggets of truth out of this video that may be helpful to you, please hit the like button. It will tremendously help out me and the algorithm. Will suggest this video to others. Please let us know in the comment section your thoughts. A little bit different video that I've done, but really enjoyed this topic and talking about this. Let us know your thoughts in the comment section below. Hit the like and subscribe button. We'll see you guys next time.